Salam everybody, this is Investor Sheikh back at it again with another video. And today's halal stock pick of the week is the SP Funds S&P 500 Sharia ETF, ticker symbol SPUS. Stock price is at $31.05. So as you may know, I have covered this stock a couple times, but this time I want to go further in depth on this ETF. This is an ETF that I do plan on accumulating from time to time, just as more of a safe bet compared to buying individual stocks. So the ETF name is SP Funds. So that's the name of the company that is in charge of managing the ETF. And SP stands for Sharia Portfolio. So this is a company that is really focused on managing a halal investment portfolio for those that want to have a halal portfolio that's managed by ETF managers who analyze the stocks, check their Sharia compliance, and determined it as a good fit for the ETF. So basically, this ETF follows the S&P 500, but certain companies in the S&P 500 are not included in the ETF because they don't meet Sharia compliance. So I have a document here that shows much more details about it. So this is from SP Funds. So the name of the ETF is the SP Funds S&P 500 Sharia Industry Exclusions ETF. The SP Funds S&P 500 Sharia Industry Exclusions ETF, SPUS, seeks to track the performance before fees and expenses of the S&P 500 Sharia Industry Exclusions Index, gain value-conscious exposure to an S&P 500 ETF. So essentially, this ETF is an alternative to SPY, which is the S&P 500 ETF, or SPHD, which is the high dividend ETF that tracks S&P 500, or SPYG, which tracks the growth stocks included in the S&P 500. This ETF includes companies that are in the S&P 500 as long as they are not engaged in the following activities: alcohol, gambling, weapons, tobacco, adult entertainment, pork, highly leveraged businesses such as high debt, interest-based businesses, music, cinema or broadcasting, defense or weapons, and credit cards. If any companies are involved with any of that, they are not included in the S&P Sharia ETF. So as you know, there are 500 companies in the S&P 500, as it consists of the largest companies in the US. And unfortunately, a lot of these companies do involve themselves with these things. For example, JP Morgan, credit cards, Altria, tobacco, and it's a highly leveraged business with their high debt. So those are reasons why those stocks are not included in the ETF. So you're not exposed. So your money is not going toward those companies. So the ETF was created pretty recently in December 17, 2019. It has 188 holdings. So out of the 500 companies in the S&P 500, only 188 are included in the ETF. So they really filter out a lot of these companies are not included in the ETF. 312 companies are not included in the SPUS ETF. So they're really strict with that. So that's good to know. And with them managing this ETF is going to come at a cost, which is shown in the expense ratio of 0.49%. Meaning for every $1,000 you invest in SPUS, you're paying $4.90 a year in fees. So the top 10 holdings of SPUS consist of Apple at 12.99% and Microsoft at 10.3%. Then it's followed by Facebook, Tesla, Alphabet, which is Google, Johnson & Johnson, Procter & Gamble, Nvidia, and Home Depot. So as you can tell from the top 10 holdings, this is a really tech-heavy ETF with Apple, Microsoft, Facebook, Tesla, Google, Nvidia. Those are tech companies. And considering that there are 188 companies in this ETF, a lot of those companies are going to have 0.01% exposure in the ETF. So a lot of your money is going toward Apple and Microsoft, Facebook and Tesla. So that's something to keep in mind if you decide to invest in this ETF. It's pretty tech heavy. And then looking at the performance, it has had a 26.39% return since it was incepted, which is significantly higher than the S&P 500 return of 19%. So I'll mark it in red. That's SPUS, 26.39%. And then the S&P 500, which includes the 312 companies that did not make the cut for SPUS, 19%. So you can tell that a lot of these companies that were excluded in the SPUS ETF would have brought the return slightly down. So that's something to keep in mind, which can be considered a bit of a pro for the SPUS ETF. So let's take a look at the other holdings in SPUS. So I'm actually looking at this website right here, and they say that there are 202 holdings. So I think they may have added 14 more stocks since that paper was published. So I'm going to scroll down this list, and there may be some names that pop up like Coca-Cola, Nike, Texas Instruments, Lowe's, Starbucks, 3M, Estee Lauder, Waste Management, Ecolab, Public Storage, eBay, Ross Stores, Motorola, HP, AutoZone, Etsy, Hershey, Dollar Tree, Ulta, Clorox, Norton, Advanced Auto Parts, Gap. So a wide variety of companies that are included in this ETF, despite the fact that some of these percentages are very minimal minuscule. 0.02% exposure of gap. So really that's the reason why many people focus on the top 10 holdings, because they are heavily weighted. So looking at my holdings for SPUS, I have made a challenge to have 100 shares of SPUS by the end of summer, and I've already exceeded that goal. Right now I have 131 shares of SPUS, and the total return is $204, which is a 5% return, which is really good so far. And this is slow growth. I don't expect to get 100% or 200% growth in this ETF in a short period of time. This is meant to be a long-term hold. So I do wish to continue adding more shares into my position and then making an update from time to time. Inshallah, maybe I might have 1,000 shares of SPUS. Who knows? So this is a good ETF to consider if you want to invest in the S&P 500 without having to worry about investing in companies that are not Sharia compliant. As always, I'm not a financial advisor, so please don't buy this ETF because I'm talking about it. I am invested in this stock using my own money as a retail investor. So please do your own research on SPUS, analyze the companies that are included in the ETF, and determine whether or not this is a good fit for your portfolio. This is Investor Sheikh checking out.